All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan. Everyone knows the channel Casgains Academy. They did a video called 90% Crash Guaranteed. There's a lot of false things in that video. So we're going to kind of talk about him because he was, in our opinion, also fact, but our opinion too, he was wrong a lot. And it's very misleading. So that's what we're going to talk about.
All right. Well, if you guys enjoy this kind of content of about two stupid guys just learning to trade stocks, by all means, give us a like and subscribe below. We'd love to have you guys along on this journey. With that, we'll get to it.
Two Stupid Guys Trade Stocks.
All right. Let's get into it. Huh?
Yeah.
Casgains Academy is wrong.
This was the thumbnail of the video, right?
This is the thumbnail of the video. I know what you're thinking, 90% crash guaranteed. At no point is that mentioned. So I don't know why that was there. It has nothing to do with the 90% crash or talk about a crash in general. It's just clickbait. It wasn't for anything.
Yeah, you gotta love it.
So we're gonna break this up into claims and why they are just unbelievably false. So basically, the claim was the possible scenarios of our current economic and stock market outlook are lower than expected inflation and recession. That's it. Both of which favor growth stocks.
Yeah.
Okay.
Yep, exactly. Very interesting. Not just growth stocks, but in particular, Cathie Wood's brand of hyper growth stocks.
Ah.
Yeah.
Interesting.
Exactly.
Okay. So this is a little, this is the CPI index for everybody. And, he kind of said inflation is starting to cool down as commodity prices are cooling off. Lumber, oil, copper, US dollar is increasing, is pointing towards lower inflation. Okay. I'm going to let Vinny take over here.
Yeah. So I thought this was kind of interesting. There's definitely been like a decrease. This is lumber. This is the one that Cathie Wood's particularly cited, like, kind of in her debunking or her, according to Casgains Academy, Twitter rampage against Michael Burry.
Quite the rampage, right?
Yeah, I know, right? How it's descended quite a bit since May. And yes, that is indeed true. Lumber has had quite a significant pullback. But if you look at the long-term horizon, it's still above where it was before we had the pandemic and the global shutdown. Like, it's not, it's hard to put the genie back in the bottle when the supply chain has gotten used to these increased prices. Are you going to be willing to work for less next year, Dylan? No, that's not how the world works, right?
I'm under contract, unfortunately.
Yeah, but your contract price doesn't go down every year.
Fair.
Yeah. And the other ones you talk about, copper, having a 10% pullback. Yeah, but look at this long-term time horizon. Copper is still significantly above. I mean, look at this from a swing trade standpoint, Dylan. Right? You got all three moving averages lining up beautifully here, don't you?
Oh yeah, I'm looking for that bounce around that $4 level.
Yeah, I know, right?
Looks good to me.
Pick up a little Freeport McMoran at that point.
I have some actually.
Yeah, nice. I love it. And then crude too. They talked a little bit about the pullback since May, and I agree. There has been a little bit of a pullback, but still, this isn't dramatic shift from where it was pre-pandemic. In terms of commodity prices.
Right. Yeah, it's still up a lot.
Yeah.
So this is a direct slide, except for the word claim, but this is a direct slide from his presentation. But basically, lower inflation scenario, investors predict lower than expected inflation, which means bond yields fall as bond prices increase. That little part there is true. Growth stocks increase in value.
Yeah, interesting, right?
Okay.
So, what's that?
No, go ahead. Yeah.
So interesting when you talk about the bond yields here. Yeah, I agree that they're still at historic lows basically, but it's hard for them to go down too much further. In that actual video, he showed a 6-month timeline. It's certainly over the last 6 months they've been on a downtrend, but it's hard to argue that money's going to get too much cheaper.
Basically free. That was unbelievably misleading because he shows you a 6-month timeline from March, right where it starts to decrease towards the tail end there, right? Yeah. But in reality, when you look at the 10-year the 10-year Treasury constant maturity rate, we're really low. Like money can't get much cheaper. And the problem is it's very cheap. So as the yields are going to increase, and basically loans are going to cost more, that's horrible for growth stocks because they don't have any money.
Yeah, they need to borrow a lot of money in order to fund their future operations until they become profitable. I wouldn't say horrible, but yeah, it's certainly a headwind. Yeah, this one's even more interesting to me.
This is the best one. So this is also a slide from his presentation, except for the word claim. Recession, investors buy bonds for safety. Bond yields fall as bond prices increase. Growth stocks increase in value. So in a recession, you want to buy some Fubo. I mean, I love Fubo.
Yeah.
Yeah.
The mental gymnastics on this one, in order to make this make sense, are kind of confounding to me. So the first part of the slide here, we talk about investors buy bonds for safety. Okay, reasonable logic. People. There's a flight to safety. Bond yields do fall, because there's this flight to safety, and it is indeed true that growth stocks will be able to borrow money at a cheaper rate when there's been this flight to safety. The problem with this whole logic is that the very flight to safety that causes the bond yields to drop also causes growth stocks to drop. Yeah. So I took a couple of snippets here from a couple of sources, both Investopedia. This is, Investopedia is basically like the basic resource, an encyclopedia for investing.
Pretty much.
And pretty much right in there, they tell you that this is not the case. Value stocks tend to outperform during bear markets. All right.
Yeah.
And then this was actually another interesting. This was a really good article. I'll try to remember to link it below. But they really went through multiple recessions. I think it was like 1957, and basically found that only once during that entire time period was a growth mentality outperformed the value mentality, but that was because they thought it was due to underlying decrease in the economy rather than valuation change, which is more what people are arguing for at this point in time. Is the economy is great, it's just the valuations that are a little out of sorts.
Right. Okay.
Yeah.
We should link that because that's a good article.
Yeah, I'll try to remember to do it. And then this is where the valuation being out of sorts kind of comes from. Look at this margin debt. Money is so cheap. People are just borrowing money and throwing it in the stock market. You got Robinhood Gold and you're good to go, right?
Yeah, it's disgustingly cheap how much money I can borrow on Robinhood. It's pretty unhealthy. Yeah.
And same thing. We talked the previous video about this, but the Buffett indicator, just giving you an idea of like how the stock market has become disjointed from the economy in general. See, when I look at this and Michael Burry's basic underlying bet against Cathie Wood, he's basically saying we're playing musical chairs, and at some point the music's going to stop. And he's looked around the room and he's going like, that guy looks pretty slow. He's got a messed up leg, and he's like had a couple too many drinks. So I don't think he's going to be survive the first round of this thing. And that's what he said about basically ARKK ETF. It's going like this is the one. This is the person that's like most susceptible to the music stopping. This cheap money stopping.
That's a wonderful analogy.
I figured you would love it.
I did like it.
Yeah, you want to go on this claim?
Yeah, so we're going to get into, he basically throughout his whole video was then just saying like Burry's wrong and all this stuff, and Cathie Woods is an angel and she's just right about everything. So at 121, Casgains Academy claims that Burry doubled down his bet against the entire market via put options. That's important. Against the entire market via put options. It's important because it's in no way accurate.
Yeah.
At all.
Yeah. How many puts do you see on the screen, huh, Dylan?
I see 3, and one of them has nothing to do with. One of them is just the Treasury.
Yeah, exactly. I mean, you could argue that there are sides of like the same bet where you're looking for a kind of reversion to the mean. Basically, I think is what Burry looks at for this stuff. So he does have put contracts on Tesla, ARKK ETF, Cathie Wood's flagship, of which Tesla is the largest holding. And also against the TLT, which is the long-term bond ETF. The vast majority of his positions are long positions, including call options against companies like Facebook, Google, He is hardly anti-tech, anti-growth. He just wants companies that actually are producing cash and deserve to be valued at the levels they are.
That's the best part of those growth companies, ones that produce cash.
Yeah.
And another thing is everyone's going like he's shorting Tesla and ARK, and they're really equating it the same. Can you read the percent of portfolio for the ARK there?
Yeah, so it's kind of questionable. So 1.48% is what the contracts ideally represent in terms of underlying shares of ARK. In reality, this is a relatively probably small bet compared to his portfolio, because it only accounts for the value of the shares, and the premium is always less than the shares. When you're doing put contracts, you pay a premium for the right to sell shares at a specified price at a future on or before a future date. So it's actually probably a much smaller position. He might build it over time, though. I think this might be one he sticks with and continues to add to.
Probably, yeah. Which is going to get into our other claim here.
Yeah.
He claimed that Michael Burry's bet, which he started a few months ago, is not paying out as anticipated. One, he actually started in quarter 1, so not a few months ago. Also, this is public information, so I don't know how this happened. If you want to go to the next slide. So he's referring to TLT at that point in the video at 3 minutes 33 seconds. So the red is the increased Fed buying. The first green box is actually where he entered, to be clear. The second green box is where he added, and the claim is that he's not doing well, right? So if you look at where we are, this is a pretty typical ABCD pattern. Going to the short side. Depending on where he entered between January and end of March, he could be negative. He could be positive. He's most likely probably in the middle. Here, go to the next slide for me.
Yeah, and you haven't seen the catalyst yet of like the Federal Reserve actually announcing a firm tapering, which is, I think, what he's looking for as far as a catalyst.
Which just happened yesterday.
Well, it kind of.
It happened.
Yeah.
I'm calling it. Tesla, this is when he entered the Tesla put. Puts are when you want the stock to go down. So clearly he's most likely pretty positive on this one as well, because that was at like 900-ish. So looks pretty good to me.
Yeah.
Maybe I'm wrong. ARK, this one's more in the middle. Really depends on where he entered. We have no idea. We are not going to speculate as to where he entered because, frankly, it is pointless. We don't do that here.
Yeah.
But he entered somewhere in that red box. This is my favorite one.
Yeah, this was pretty funny.
Cathie Wood's underperformance this year is a positive signal for her.
Yeah, I mean, she said it too. So, I mean, he wasn't making this up on his own, but yeah.
Okay.
So one thing that's particularly interesting about this is, if you remember the movie The Big Short, is Michael Burry was running a hedge fund. At that time when investors started to doubt his housing short, he was able to lock his fund, right? And prevent withdrawals, so he didn't have like a run for the exits and have to liquidate his position at a loss.
Because everyone would have. Because it's crazy.
Unlike Michael Burry's position there, Cathie Wood runs an ETF. She is unable to do that, meaning that if there was a shock to confidence in her ETF, that there's nothing she can do to kind of stave off the run for the exits. So if something, it doesn't take much. It takes like one little little ember like into a pile of tinder, and like you could set that off, and then unfortunately it could be a self-fulfilling prophecy.
Yeah, it's essentially anyone can leave at any time.
Mm-hmm. Exactly. Yeah, and people have been leaving. That's what this article right here was about. Since the end of June, about $2.7 billion have left her fund. I mean, that doesn't necessarily mean like the end of the world, but it is true that it is something she's having to kind of stem the tide of.
Right.
And this is kind of funny too, when you see this is how much, like, to a degree that maybe people smell a little bit of blood in the water, because it's just sharks. Someone actually applied, I think it was Total Capital, applied for a inverse ARK ETF that would not be approved by the SEC until at least October. Expected to trade under the ticker symbol SARK, SARK. Which I thought was pretty funny. But I think this thesis that Michael Burry has by putting these put options there is not entirely foreign to many other more value-oriented investors.
Right. This is also cool. So yeah, so generally, this is back from the claim that her underperformance is actually a good thing. So at no point is underperformance like a great thing. And I put this on the same slide because there is a claim that growth stocks increased in 2020, value stocks increased in 2021. So that means that growth stocks have to increase in 2022 because they're next in the rotation. Because that's how stocks work.
Yeah, perfect. Oh, you should just get on top of that,
I
Dylan.
would be a billionaire if that was that easy.
Yeah.
Like everyone would. We just be like, oh, all right, December 31st, get out.
Yeah, done.
Start tomorrow. What on earth is that?
Yeah. Nothing in life is that simple.
I don't even. Okay. Yeah.
Yeah.
This one's minor. It just bothered me because of this isn't so much a bad claim. It's just that it's the way he said it. The Manheim Used Car Index has been falling month after month. 622. The next guy.
Yeah.
It just fell for 2 months.
Yeah. Month after month.
This is another zoomed in thing. It's actually still 18.3% increase from August 2020 to August 2021. But if you just look at the last two candles, or two bars, then you're like, oh yeah, it's falling. It's not how it works.
Yeah, I love it. So you're telling me my car is 18% more valuable than it was last year?
Technically.
Yeah, I mean that's pretty solid. I love it.
Now, granted, it depends on if it's like a van versus an SUV. Well, I don't get into that, but yeah.
Exactly. I actually wanted to just throw this tweet in here. This is back from when Michael Burry still had a Twitter account. Tweeted this back in February, where he was talking about already at that point, kind of going inverse ARK. It's interesting about how like at that time. It was like so unthought of and unfavorable to even think about taking a bet against Cathie Wood that the call options and positions she owned were 9 times more in terms of volume than the put options. I'm sure that the put call like parity has kind of changed around a little bit over time here. But,
I'm sure it definitely has.
Yeah, he was definitely eyeing this pretty early in the year.
Pretty early in the year,
yeah.
So that is our Casgains video. Didn't you say something about
paywall? Yeah.
So is that true?
So one of my gripes with this is that in order to see whether or not Casgains Academy has a financial interest here and owns any ARKK ETFs, I'd have to join their Patreon and pay $5 a month in order to see that. Like to me, that was just that's all kinds of wrong. If you're going to put content out there like this, that is of loose factual basis, compared to other verifiable things. I understand in life that nothing is always 100%, but and then also have a financial interest in that's pretty questionable to not disclose that publicly.
Yeah, it's pretty messed up. It's not cool at all. Like we did a video on how we don't like Nikola. And like I straight up showed I'm shorted Nikola. I have 5 contracts.
Yeah.
So it's we do full transparency here. We're a much smaller channel. It's not very popular to do that. But yeah, there you go.
We'll do our best. Well, let us know what you guys think in the comments down below. I know a lot of you guys out there watch Casgains Academy as well because it's YouTube on our analytics tells us other channels that our viewers watch, and this is one of them. One of the top 10 or so.
Yeesh. Okay.
All right, guys. We'll see you in the next one.
Have a good one.